David Hunter, a few days ago, made the forecast that the S&P 500 would be between 6,000 and 7,000 by September of this year. This is a mind-blowing forecast. Now, is it true? And would I agree with that? David, who's the chief macro advisor for Contrarian Macro Advisers, in a Kitco interview said that this would be a vertical parabolic blow-off which was going to be euphoric in nature. I can't say I completely agree with that statement because the timing doesn't fit. And what we do is all about timing. Now, there are some things that he did say which do fit with what we have been saying. If you remember, we talked about this Jupiter-Rahu conjunction. We've been saying this for weeks. It happened on June 1st. It happened in 1987, and it happened in 1929. And in 1929, it was in the sign of Aries. So that's the closest match in terms of the astrology to now regarding those two planets. And what happened back in 1929 is that there was, over the summer, starting in June, a 33% rally, which is not that different than what David is saying. And in 1987, there was a 25% rally over the summer, leading into the August 25th high. So there is a similarity between the possibility of a melt-up type situation this year over the summer and what David is saying. Where I differ is he's assuming an 80% decline that will happen immediately after that and that will continue into 2024, where 2024 would be a very, very bearish year and 2025 would be the end of the 80% break. That's similar to the 1929 market if it were to repeat 1930, 31, 32. Where I differ is that this is a longer-term bear market. I could see how the high could come in and a very extreme summer is coming where there could be a tremendous amount of buying coming, and that after that the market does make a high, but it will take a longer time, perhaps until 2027, to completely digest and completely burst that bubble that started. So there are similarities insofar as the probabilities are not outrageous that we'll see a melt up over the summer. As a matter of fact, it's starting to look more likely than not because what has started is breaking through resistance levels left and right, and it's behaving as if it's the beginning of a bubble, which we've commented on. This bubble, however, if it's going to reach 6,000 by the end of the summer, by September, that is a rather extreme level. I do think we're going to break through the 4,800. I do think we're going to probably get between 5,300 and 5,500 before it's all done on the S&P. And that from there we'll completely fall apart over the few months where the crash would be an analog to 1929 and 87, but it will not be an 80% correction. I'm thinking a 25% correction, or at maximum a 40% correction, and that'll be the end of it for a long time. It won't be until late 2024 before we get any further decline, and most of 2024 will continue back up, and it'll hold up until quite late in the year, possibly until after the election. The reason that we think 2024 will not be a resounding bear market is because the 30-year cycle and the 20-year cycle and the 60-year cycle, which we've been watching and which have been repeating, the 60-year cycle, by the way, is the best match of any the last 2.5 years and even the last 1.5 years over the last 100 years of data. And it does not collapse until later. It will be at least the end of 2024, possibly into early 2025, before the 60-year cycle turns down. And the other cycle, the 30-year cycle, is also bullish past the end of 2023. So whatever correction, even if it's big, even if it's 40%, it's not likely to stick. It's likely that there will be an upsurge of price that will continue for a good deal of 2024, and it will allow the market to kind of stabilize before potentially a really serious economic bear market will continue into 2027. I have to give him credit for being one of the rare, contrarians, and of course he's been correct about a number of calls in the past that everybody was completely surprised by. Good news is you can map it. If indeed the market does not go down much in July, we're expecting a high around the end of June, starting down in July, and if that decline is choppy and sideways and it's not very deep, and it holds through until August 4th, where the next low is, then we are repeating very, very much like what happened in 1929. So the indication will be what happens in July and how deep a correction is there. And then after that, we could resume in a fairly dramatic way to continue up higher and higher in August into September, mid-September, even until early October. October 5th comes up as a possible high point before the market really falls, at least for a few months. If you want to find out more about why we're thinking what we're thinking, you could check out our series of shorts, and the link you'll find here or there.